Splendid evening it is to you viewers. It's Equity News on Equity Access, your cross-section of stock market developments and of developments in the Zimbabwean economy. Ibn Mabunda signing in. Let's get started. Our stories tonight. The Presidential Advisory Committee, the PAC, today met with the head of state and government, President E.D. Mnangagwa, for the very first time. In his keynote address, the President called upon members of the PIC to make use of their expertise and advise Zimbabwe towards a positive economic trajectory. He also called upon members of the PAC to make use of their contacts locally as well as internationally towards reaching Vision 2030 of Zimbabwe reaching the upper middle class income economy. Let's have a listen.
My administration is acutely aware that the interconnectedness of the global world means that domestic policies now have to be crafted with a global outlook. We must therefore seek to proffer strategies on how to develop, how to modernize, and how to industrialize every part of our country, improve our infrastructure, speed up the development of rural industry systems, as well as increase our overall productivity and exports to effectively enter and participate in the global value chains and the global markets. Let us also harness our collective capacities and capabilities to create conditions where peace, unity, and development can flourish in our country. Guided by the mantra, Zimbabwe is open for business, our actions should never lag behind global developments and expectations. My belief is that the development of our country and upliftment of our people's livelihoods must be a broad-based, inclusive approach. Together, let us sharpen our focus and make solid footsteps as we define and walk the road towards delivering the Zimbabwe we want.
Former Delta CEO as well as Captain of Industry, Mr. Joe Mutizo, was appointed head of the Presidential Advisory Committee. In his address, he said that the PAC was already working towards its first set of recommendations, which are set to be released end of March. Again, let's have a look.
Your Excellency, I can report that members of the PAC are keen to get to work. We have already commenced organizing ourselves, even before inauguration, into thematic work groups, taking guidance from the 5 strategic pillars articulated in Vision 2030 document. Furthermore, Your Excellency, members have, in the last couple of weeks, taken the opportunity to familiarize themselves with both Vision 2030 document as well as the Transitional Stabilization Plan document. Now that this inauguration has taken place, we see the roadmap, the road ahead as having some distinct milestones, some of which are. Your Excellency, you mentioned yourself that you are impatient for results. We as PAC are fully appreciative of the urgency and gravity of the challenges that face our country. In view of this, Your Excellency, we believe that our first task, our first and urgent task as PAC, is to use our collective expertise and experience to draw up a compact template of quick wins designed to complement the various action plans already underway across government structures. It is our intention, Your Excellency, to do this before the end of March so that we can thereafter submit our recommendations to you this month.
Meanwhile, fast food operator Simbisa Brands today released financial results for the half year ended 31 December 2018. Simbisa is well known for its flagship brand Chicken Inn, as well as Creamy Inn, Nando's franchise, Galitos franchise, as well as the Steers franchise. The corporation, of course, has operations across the region, as well as Kenya and Nigeria. Let's have a look at the stats to look into their performance over the past 6 months or over the period in question. Well, the revenue scaled 44% to $144 million, while also the profit after tax scaled 99% to $16.5 million. Also, in like manner, their earnings per share scaled 100% to 2.92 US cents. Well, despite such a positive performance, Chairman Mr. Chinake said that the economic framework in Zimbabwe was too harsh and impinged on the operations of the corporation. Suffice to say that perhaps their performance could have been better in the period in question. He also said that Simbisa is on a growth trajectory with new centers being opened in Zimbabwe as well as in Kenya. He said also that Simbisa has a pending listing on the AIM in London, which for now will be shelved until economic framework or policies in Zimbabwe are set on a clear path. Meanwhile, Axia, which is a company that deals in retail and distribution, with the flagship brands being Transerve Distribution Group Africa, as well as TV Sales and Home, also released financial results for the half year to 31 December 2018. Let's have a quick look at the stats and just to look at their performance. Their revenue grew 74% to $234 million, while also the profit after tax grew to $16.4 million. This was driven by a mixed volume performance across TV Sales and Home, as well as Distribution Group Africa. Well, according to the report, their subsidiary TV Sales and Hire acquired a 49% stake in Restopedic Trading as Mayton Private Limited. This is part of a strategy of securing bedding supplies for their operations in TV Sales and Home. As the group seeks to expand its footprint in the region, revenue mounted 6% and 14% in Malawi and Zambia respectively. In terms of the outlook, the group says, given the fact that 50% of its inventory is import material, the group will seek to expand its footprint beyond the confines of Zimbabwe, as well as beyond the confines of their normal lines of business. Plus, another listed company, which is the only listed brick manufacturer that we have on the Zimbabwe Stock Exchange today, held an annual general meeting in which a trading update was given. According to the trading update, the first 5 months of their new financial year to 30 September 2018, that means from October to February, was very much in the negative due to hyperinflation in the country as well as currency issues. Resultantly, their sales volumes were 22% below their prior year operations against the comparative period. This, of course, would be their performance over the past financial year. They recorded a growth in revenue to $13 million, profit after tax coming from $300,000 to $1.1 million. While this is the case, Willdale is also hoping to achieve a capacity utilization of their plant of 85%. And despite harsh economic conditions, the group is optimistic in their approach going forward, betting on a $650 million budget set by the professor, who's the finance minister, Professor Mthuli Ncube, at $650 million towards housing as well as the construction of accommodation facilities across universities in Zimbabwe. Feeding into their bullish approach is the fact that Zimbabwe is said to have a housing deficit of 1.3 million housing units, which Willdale is confident that will be able to play a significant role in the servicing thereof. For a conversation of these and other issues, I'm joined in studio by our resident chief analyst, Respect Gwenzi. Respect, good evening and welcome to the show.
Thank you, my pleasure. Good evening, viewers.
Splendid. Let's get the ball rolling. Well, the Presidential Advisory Committee meeting with the President calling upon the players in that field to work towards Vision 2030 as well as the Transitional Stabilization Program. How significant is this engagement between the President and representatives from the private sector?
I would want to appreciate the gesture in terms of what the President has initiated, but in terms of effectiveness, I want to believe there is enough manpower already within the government to possibly push for effective reforms. But on another note, this is a body of professionals within the respective fields with business, health, social welfare, and some other key areas of the economy. So I believe it's a good gesture. But in terms of impact and what these gentlemen and women are supposed to deliver, I don't think there is a clear roadmap as yet. I'm sure the team, the PAC is said they should be bringing in their initial assessments at the end of this month, and that's where we will probably likely to see effectiveness in terms of what they can possibly bring on board, because they said we want a closer collaboration with existing government structures, be it ministries and whatnot, so that they can also map out their own strategies. But from the President's side, he seems to want this pool of experts to try to tap into their connections and their conduct.
The President did say would like to call upon the experts to make use of their contacts as well as network, suggesting that look locally or abroad.
Yeah, but that is never the starting point. The starting point is always that you have to have internal systems. You have to clean up the internal side of things. You need to, if it's in terms of investments, you need to make sure that your laws are aligned. You need to know that they're also favorable. You need to ascertain the opportunities. You need to find your relative strength. And it is where this body of experts should come in to evaluate and assess, say, particularly in business, to see the opportunities that can be there. That can be offered to the outside world in order for Zimbabwe to improve on its standing with the rest of the world, either in terms of governance, economics, and whatnot. So this pool of experts can create all those special economic zones, taxation systems, policy side, and so forth, refining the indigenous and what, so that when they then engage the outside world, we have a proper and formidable investment case that we can sell. So it's not just, it doesn't start where you say leverage on your conduct outside, right, in order for us to get something. I think that same mistake can also be drawn from the recent engagement through, government and the Ballard partners in the United States with regards to sanctions. It never starts at a point of trying to lobby, or at a point where you engage people who are close to the powers that be or your intended target. The engagement doesn't have to start there. We have to have internal systems.
Charity begins at home.
We have to have internal reforms. We have to appreciate already that we have to have an appreciation of what our investment climate looks like, what our internal systems look like. You can't achieve that if you have a corrupt system, if you have no proper systems to even monitor and evaluate the movement of funds and whatnot, and if you have a higher taxation regime, all that weighs against your efforts to try to engage the outside world.
Yes, you did mention corruption. Zimbabwe is ranked number 160 out of 180 in terms of the corruption index. We can also talk about the ease of doing business index. We are ranked number 155 out of 190. Sure. You compare us to other countries like Rwanda. Rwanda ranks position is 19 or 20, as well as other countries like Mauritius, which are doing very well on the continent as well as in the region. So I think very much hinges upon the framework that we set here in Zimbabwe, as well as our eagerness to actually engage and make a difference before we actually clamor for international assistance in that sense.
Yeah. So to emphasize, so the this pool of experts, their efforts or part of what they can bring on table should be more on creating real internal structures and real systems in Zimbabwe that can make Zimbabwe attractive. They should, in other words, be part of the reform agenda. They should reform the state before it can be put out to the world for evaluation in terms of investments or any other objectives.
Okay. Moving on. Well, we are in a reporting season, and Simbisa Brands releasing their financials for the half year to 31 December 2018. But before we look at the financials, let's just have a quick look at who these guys are, as well as the brands that they actually represent: Chicken Inn, Pizza Inn, Creamy Inn, Baker's Inn, Fish Inn. Then, of course, they also have other franchises that they're actually running. You have Nando's, Steers, Galitos. Of course, the list is interminable. Of course, they have a presence in different countries. The DRC, where they've got, I'm sure, as you can see from the screen there, and here in Zimbabwe, 61, correct.
Where they at 194.
Affirmative. You also get into Kenya. Well, you have 121 company-operated stores. Zambia, 42. Ghana, 19. The DRC, 10. Mauritius, 15. Namibia, 6. Swaziland, 9. But just to give us a cross-section of what of their presence across the region. Of course, this would be the map that actually points out their locations. They're in several countries in the region, or then of course there is also that Nigeria. I'm sure it's right at the bottom. But I'm very much impressed by their presence as well as their aggression. They were a part of our top 10 counters up until Cassava Smart Tech was listed recently. So, well, let's talk about their financial performance. Respect their revenue. They're scaling 44% to $144 million. What is your take?
I believe this is a very strong set of results, and given that almost 50% of their business in Zimbabwe, it was partly expected given the surge in aggregate demand locally. Most people purchasing goods at a higher level in the past year due to increases in liquidity on the market. So this is largely in line with local trends, and for the part that is outside of Zim, Kenya has been resurging lately. We've seen the rebound in demand after much of the election problem or the election crisis was solved. So performance in those two key markets, which control over 75% of the group's revenue and volumes, has been solid. And against that background, we are seeing this kind of growth. But it's also key to highlight that much of the growth is coming from acquisitive growth. They have been acquiring some units or some restaurants owned by different people across the region, and they have also been opening new stores in so many different markets. So if that number could actually come in at about 20 or so stores in the past year, so that has also contributed to increased revenue and increased volumes in the period under review. But I think this momentum could be sustained, but the Zim market is likely to subside a bit as the tax effect takes toll, and also the inflationary effect taking toll on consumption. But this is a very formidable performance. Revenue actually, profit position actually doubling year on year. It's a very, very solid performance.
Right. TSL delayed the release of their results. They have a 31st of October year end. They did not release their results because they said they were uncertain in terms of the currency to report on. Now, how real or how substantive are these results given what's actually happening in the economy against the background of us coming from a bond to US dollar 1:1, and now we've got an RTGS dollar that is prevailing?
I think the assumption under TSO was that the PAAB, which are the responsible auditors and accountants, were supposed to release a statement prior to companies releasing their results. But I also feel that since up to 2018 year end, there was a clause which says, the reporting currency is USD. So the assumption is that all this money was USD. But now that everything has been converted, we see that almost all balance sheets are down by about 150% or so. Due to the exchange rate effect. So that really plays a great deal in terms of. But you can actually adjust or discount for that going forward. But as a 2018, it would also be fair to just put the numbers as they are. You can always do the maths going backwards to say, so if this, then we have to discount that for the exchange rate effect. So I think it's gonna vary with companies as we go forward. Some will say let's await for the PAAB, but I think these results that are coming out are an indication that there's a loose end to relying on, to expect a statement that might supersede the MPS, because the MPS is the final arbiter, although Parliament might have to play a role or so. But I think it's a quite fair assessment of the performance.
And lastly, very quickly before we move on to the next story, Simbisa is set for an AIM listing in London. And Chinake says they have put it on hold until there is clarity in terms of the economic policies locally. How long do you think these guys are going to have to wait?
The AIM listing was precedent to them acquiring the entire acquiring a majority stake in Food Fund, which is mainly based in the Arab side of the world. They wanted to acquire a certain restaurant operating company called Food Fund, and so they wanted to raise that money through the AIM
listing.
So I think fundamentals changed along the way, and also they decided to shelve the project against looking at the appeal of that investment. So I think there have been contention within the management and also within some investors to say there might be not as strong fundamentals within the company that you are seeking to acquire. And so there have been a lot of issues around the issue to do with Food Fund, and hence the delay. So I wouldn't have a timeline to really say they might do it at this point in time and so forth, but they are really still keen on acquiring Food Fund, and the paperwork had already been done with the firm that was due to be acquired. So I wouldn't know if things stay like that, but it was also going to be a very good divestiture from Africa, since these guys mainly have operations outside of Africa. On
to Axia, their revenue scaled 74% to $234 million. But these guys, they run Transerve, TV sales, and home. They also run Distribution Group Africa, which has a presence, of course, in Malawi as well as Zambia. How significant are these figures, and as well as the growth? 74%, that's quite significant, coming from a base of $134 million in the previous year.
This is quite a huge growth, and these numbers, I think it's quite clear that they cannot be replicated going forward. But if you have an appreciation of the macro environment in Zimbabwe in 2018, you can easily see that these numbers were achievable. Why? Because much of the prices were increased by a margin which is upwards of 100% in most commodities. And there's a point where people were rushing to buy goods of assets which are almost of the nature that one of their units sells.
Okay.
So as to preserve value, people could buy up to 10 television screens, or be it beds or whatnot, as a way of reducing the exposure to hard cash. And so there was that huge jump in terms of demand, and also in terms of volumes, while these prices were also going up at that respective time. So I think this is mainly a representation of the growth that was driven by price gains as well as volumes growth. So a growth of 70% was definitely likely to come. And also, if you look at the bottom line, there's not so much of it's a growth, but it's not as big as the jump in revenue. Why? Because at the same time, costs were also growing, because they would acquire these units via, from the region using USD, and they would have to convert the local money into USD.
Okay.
And so forth and so forth. So definitely it took a toll as well on their operating expenses. But these numbers are largely in line with what's prevailing and what has been prevailing in Zimbabwe in 2018. But I think it will be also fair for us to look at what they are likely to do in 2019. Consumption generally is expected to decline.
Okay.
Yeah, so I think we're likely to see a very significant slowdown in terms of the growth numbers or even the revenue itself.
Okay, I'm going to have to pick this and make it the last one. This corporation acquired a 49% stake in Restopedic, which trades as Martin Private Limited. How important or how relevant is that acquisition to TV sales?
Okay, so what has been happening in 2018 is that most of these big companies were realizing some huge growth numbers on the top line side of their business. So as revenues grew, their balance sheets also grew. So they are holding significant cash balances, and you're looking at the possible investments that are at your disposal. You're thinking, if I leave my money in the bank, then it's most likely that it will lose value. So what do? You look for smaller companies along the value chain to acquire. And it's not the only company which did so. There are so many. If you look at Power Speed, they acquired the properties on which they were renting. Okay. It was a way of maximizing value by utilizing the cash that's within their books in light of the inflationary pressures. And that's true of Delta as well. They acquired the South African brewer, the South African brewery company, one of the brewery companies in South Africa, as a way of trying to push much of their cash resources and obviously counter the inflationary impacts. So I think this is the same gesture here in terms of Axia. But what it might mean, obviously, when you acquire a company down the value chain, it might end up reducing the costs associated with acquiring the end product that you then sell on the market, because they are basically into retail. And so if they're going down the value chain, I think it reduces the cost, but bed is just one line out of so many lines that they're into. But I believe it's it takes a significant portion of their business.
Okay, and then lastly, Willdale says that, they've been affected by the prevailing macroeconomic conditions, with their sales dipping 22% year on year. In that sense. But of particular interest to me would be the fact that they are quite bullish and optimistic in their perspective of the progression of the corporation going forward, highlighting how that the Finance Minister, Professor Mthuli Ncube, did allocate an amount of $650 million towards the construction of accommodation facilities in universities, as well as toward housing development, as well as the fact that there is an estimated housing deficiency of about 1.3 million units across the country. What is your perspective where that is concerned?
Yeah, generally the fundamentals of that sector are quite positive. There's a serious housing backlog that has already been standing. The Zim asset, which elapsed last year, had I quite highlighted the need to close that gap, and it was one of the key pillars to move in and clear the housing backlog in Zimbabwe. But of course, given the macroeconomic environment, that was not achievable or achieved. So I think we are still within the same problems to say. Of course, we might have highlighted that these are the challenges that we have. This is the gap that's there. And obviously it brings business for the people like Willdale. But does government follows through to make sure that
with the implementation?
Yeah. So I think government has set aside about 2.5 billion in 2019 to take care of basic infrastructure development. And maybe out of that, that's where that 600 and something is concerned. So the fundamentals of the broader sector are firm. What's really not clear is whether those values still hold, because when you're budgeting for 600 last year and inflation goes up by 50%, and actually prices in the market due to the what you call it, the exchange rate discount, you find that most of the prices are up more than 100%. So you might now have to adjust or to forgo some of the projects. So basically, there's going to be a bit of a shift in terms of the forecasted expenditure and the actual budgeted expenditure. So it remains to be seen on the outset. But that's where they're drawing their optimism against. But as a company, I'm sure they have the capacity to push production forward. But they hastened to highlight to say much of our production in the first 5 months was affected by low disposable incomes, which did not move in line with inflation. So whenever there's that gap, definitely people have to turn back, and construction is not much of a people in such circumstances, they prioritize basics. So the elasticity of demand of housing construction is quite elastic. So when you then now get to when you then now get to construction, that's how they then realize that 18% and 22% decline to target and to the prior year. So I think that was some of the problems that they highlighted, plus the lack of adequate fuel in terms of diesel, which they said the first challenges in sourcing in the prior year. So some of those challenges are still with us, and they are likely to also continue to dampen the company's prospects going forward, although supply has improved a bit over the past few weeks and months. But there's a new law which came into effect a few days ago to say some of the companies can now import on their own. But we know what that does as well to the cost function of the companies in question. So I think it's a broad set of factors at play, and the bullishness might not necessarily result in the actual performance growth. And I believe we are likely to see a tapering off at full year from this record 13 million in revenue achieved in the full year to 2018.
Well, thank you, Respect. Up next is Anis with the stock markets. Please stay with us. Good evening, Anis. Welcome to the show.
Good evening, Eben. How are you doing today?
Fantastic. Yourself?
I'm all right, my brother.
Beautiful. Please take us through the stock market.
All right, just a quick one. My board is very red today, just as much as the red wedding. But the Offshore Index actually came off 2.12%, just as the Industrials Index also lit up 2.14%. The Top 10 Index lit up 2.5% for it to set at 138.93 points. Now, of the Top 10 Index, you would notice that we have about 7 counters that actually came off. Of those 7 counters, 8 are now in the negative on a year-to-date basis. Padenga and Natfoods are the only 2 that are still in the green. Natfoods, if Natfoods has any negative movement in the following days, then it will be in the red, leaving Padenga alone in the positive for the year-to-date. Well, 5-day trend, all-share index has worsened to about 4.37%. And also the industrials index has worsened to 4.47%. That's almost 5%. Also, the top 10 index that is down 4.5%, and mining's is still strong at 2.98%, with a stable 3-day run that has seen it not moving. Now, for top 10 rises and fallers, we had about 26 counters that traded today. 7 of them were risers, 11 were laggards. Of the laggards, Hippo Valley was the worst performing counter of the day, coming off 20%, while CBZ also let up about 9%. Now, African Sun was the better performing counter of the day, adding about 7.14%, while Ariston added 3.09%. Now, Willdale also, with the AGM that was held today, managed to scrounge up about 2.89%. Of those counters that traded today, we had a value increase almost of about 1,000%, where you'd find Delta was leading the pack in that regard. But the most traded stock of the day today was Cassava Smartech.
Forex market?
The Forex market also did a little bit weakened today. We do realize that our parallel market rate today did come up to about 3.6 times now, and the interbank rate also went up to about 2.51 times. Now, this is still very much a time where we can really talk about how the currency is weakening in locally, and this might actually start pushing our stock market up. If any other effect it should have, that one on the stock market.
Oh, thank you, Anesu. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From Anes and I, Danki, and Asante Sana.